In today's video, we're going to go over the two funded accounts that I've been trading the past 9 days, and we're going to talk about the trades that I took to get there, and I'm going to show you my thought process for why I got into those trades, how I managed it, and then we're going to talk about my plan moving forward. I did have a video recorded of me logging into my account and actually going through the process of requesting the payout because I don't think I've ever done that on the channel. But unfortunately, because I was messing with my OBS settings trying to do something very specific and to see if I could record my screen a certain way a few days ago, I completely forgot to change the settings back. But yeah, because the video quality is shit, I cannot use it and there's no way for me to fix it. So here you see my dashboard for my Tradeify accounts. I have two accounts here. They're both 150k Lightning funded accounts, and these are my, well, these were my statistics here. They kind of reset because I took the payout. And then if you go over to the journal, this is the stats off both the accounts. Over 20k altogether. Trade win percentage is 60%, so I had a 60% win rate out of all the trades I've taken. My average win to loss ratio is 147, and then my profit factor is 220. Current trade streak is 1, and then the current day streak is 3 days. There's nothing on Friday because I took this trade the day prior. So when I took this trade, it was after 6 p.m. on Thursday, and then I finished it out before midnight on Friday came around. So that's the reason why there's nothing on Friday, but there is on Thursday, even though I requested the payout on Friday. I just had to wait for Friday's trading day to end and close off, and then the dashboard to update. That way I could request the payout. And you know, like I said, unfortunately, the recording is blurry, so we can't use it. The first piece of documentation I have from trading these accounts is here on March 11, and I posted it at 11:58 a.m. I think I posted this a little bit later than what I actually traded. This looks like the trades that I was taking was right after the open at 6 p.m. It looks like I took the screenshot on my phone. Yeah, we traded the Asia session using Monday's new day opening gap and the 6 p.m. 4-hour candles PO3 sequence. PO3 stands for power of 3. And it says I got one small loss, one quick scalp, one good trade, and then one last scalp to hit the max consistency profit target, which is 1900 for the 150k Lightning funded accounts. Here on the right side, we have 1-hour candles, and then we have lines here that split up every hour. So it splits this 1 minute chart into every hour using these white lines. So if you look at this white line, this is 6 o'clock. This is 4 o'clock because the market closes at 4, but it opens up again at 6. So that's why there's no 5. So it's 6, 4, 3, 2, so on and so forth, right? Or, well, it stops here because it only looks at the past 1, 2, 3 candles. So we have the current 1-hour candle and then the past 3 candles here. Now, what this does is it shows you how the lower time frame candlesticks look in relation to the higher time frame candlesticks. And the way that I trade is the power of 3 or PO3 sequence, which essentially means that the candle will open, it'll either go down and then up and then close, or it'll open, go up and then down and then close. So if you look at this green candle, it opened up down here, did a little manipulation, then it ran higher, pulled back a little bit, but it essentially closed higher than where it opened, which is why it's green. Vice versa, this candle here opened up here, went higher, went lower, pulled up just a little bit, and then it closed lower, which is why it's red. I try to get in when the candle is manipulating either to the downside to run higher or manipulating up to run lower. That is essentially how I trade. And I use the PD arrays and extra stuff to help me gauge where the market is more than likely going to go. These blue lines here, this is just marking out liquidity from the past 3 1-hour candles, or essentially the swing point. So in this 1-hour interval from 4 o'clock to 6 o'clock, we have this high up here for liquidity, buy side liquidity, and then we have this low here for sell side liquidity. just like this candle, this 1 hour candle from 3 o'clock to 4 o'clock. Buy side liquidity is here, and then sell side liquidity is down here. This 1 hour candle just opened up, so it went down, right? So judging by this swing down, not taking out the previous liquidity, which was down here, and then we have a 5-minute sell side imbalance, buy side inefficiency here, but then we also have the new day opening gap as well. It's not showing because we're up there. There you go. So we have this current 1 hour candle selling off into a fair value gap from way back over here. And then we also have the new day opening gap from March 9th in this blue box. And then we have a failure to touch this sell side liquidity down here. So with this hourly candle opening up, we have a change state of delivery here as well. So we have a low, high, lower, low. We closed higher than this green candle here, or this red candle here. So this should be a protected low. And then after we closed higher than this red candle here, we failed to make a lower low. We made a higher low compared to this blue line, and then we displaced higher. I tried to long it, failed, took a small loss, scalped it down to the low, waited for it to retest the highs, and see this green candle, how it's already turning green? Or, well, it was red down here, but now it's turning green. So now the more likely scenario is it's going to go higher to come and dig into this 1 hour bearish order block. Yeah, there you go. So I sold there, and then I scalped it one more time, I think, from here up. Yep, yeah, so I scalped it up that to there. And that's essentially the trade. And you can see how this 1 hour candle closed above this bearish order block, which is why the next one kind of opened up, manipulated down, touched the top of that 1 hour candle, and then just accelerated higher. All right, March 11. This is what I posted. This was at 11:24 p.m. my time. That's my executions on the chart. And then this is the overall profit that I had off the two accounts. This is the area that I took that trade in. 5-minute SIBI, rejection out of it, and then selling off all the way down into the 4 hour buy side imbalance, sell side inefficiency. If you look at that photo, there's that 5-minute sell side imbalance, buy side inefficiency, sold off down into the 4 hour BISI. 1 hour power of 3 started at 7 o'clock because that's when the new candle opens up. So if I come over here, select this bar, so see how we just opened up at 7. 7 is delineated by this vertical white line. So 7 o'clock opened up here. We have fair value gap on the 5-minute. I took this trade on the 1 minute, which is what we're on right now. So we have low, high, failure, swing low. We're already touching the top of the 4 hour buy side imbalance, sell side inefficiency, which, you know, sometimes on the lower time frame is enough for it to send it higher. So you'll get a touch into it, right? Failure, swing lower, so it made a higher low, so it didn't break that low, and then we displaced higher with this little fair value gap there. So I was thinking that with the macro noted by this dashed line, I was thinking the macro was going to take us down and then expand higher. That's essentially what I was saying in the tweet, because we already tapped into it. These candles here touched outside of this 5-minute SIBI, and then it came in. And if you go forward just a little bit, right, you can see how it's kind of just like it's not hurrying up to get out of there. And then this right here, how it's like wicking up and then went down, wicked up. These candles aren't closing out here. It's not showing speed to get out of here, because this right here, after this pullback, if it really was bullish, it would have expanded out of it because it already dug into this fair value gap here. So there's already weakness on this little run higher. So it did hold this fair value gap here, and it did wick outside the bottom of it and then come back in. the candlesticks closed inside the 5-minute SIBI. So this right here looks strong, but the fact that it struggled here is telling you that it's more than likely not gonna expand higher, right? This is already a clue that it's struggling, especially after this already. Once I saw the candlesticks failing this 5-minute SIBI, that's when I swapped short, and then when I basically wrote it down into this candle here. And then you could see the numbers for the execution. And then this is the profit and how much each account got. But that is it for the second trade. This is where I took the next trade. Now the numbers are kind of off. I don't know why, because this says this is like 24,746, 750 at the lows. But if you look at the image, it's like 24.5. So I don't know why that is, but this is where I took the trade. And then this is a 15-minute chart. So I had to look for the 15-minute chart on TradingView and make sure that it was the same, but it was essentially right here. But my trade that I took was a pullback onto the 1-hour BISI, which was also the low of the 4-hour BISI here as well. And as you can see, we kind of went outside of both on the low end, and then we went right back in. This candle pulled back onto the BISI, didn't break any lower. And then if you look at the 1-hour well, this is a daily candle. So this is the new daily candle for Friday. It's Thursday here, but this is the Friday candle because the Thursday candle already closed here. So Friday's daily candle opened up, and then look at the precision of where these candles open and close. So this candle closed above it after wicking down, and then this candle opened right at the midpoint of it, went down, and then was starting to go back up. I took that trade here on the pullback of price onto the 4-hour BISI, and then as well as the 1-hour BISI. Draw quadrants on that. You can see that price was pulling back onto the quadrant of the 4-hour BISI as well. This 4-hour manipulation opened up right on the halfway point of that BISI. We manipulated down into a 1-hour. This low didn't take out that low. It was more than likely going to go higher. And then we also displaced higher here. And yep, I already trailed my stop up because I wasn't expecting price to come back down. So I added as price was going higher, and then I was targeting up here. If we go to the execution, this is a 1-minute chart. So this is split up into hours. So I know this is the 6 o'clock line because this is the end dog for March 12. As you can see, I split this manipulation leg down. I fibbed that up to give me targets to the upside. So it looks like I tried to short it first. I bought it back, and then I went long. And then I added again, and then I got stopped out. And then it looks like I fibbed this leg here up to get projections down. Oh, I think this was the day I tried to add, I tried to get the flash down to the low end of the March 8th new week opening gap, and then it didn't want to give it. And then I also noticed that the March 8th new week opening gap price tapped the quadrant of it perfectly, and then it started rallying higher. So I got out of that short because I knew it wasn't going to flash down like I was expecting it. And then I flipped long, added here, and then it took me out here. I do have the live execution of this trade on the YouTube channel. That was the only live trade that I posted throughout this whole time I was trading these accounts. So I'm still alive, just busy. 6 minutes long. This is the trade that I was taking, and this is the live executions that I had. That's it for this trade. So moving on, March 16 was the next time I traded. All in here, I was just getting chopped up, trying to figure out which way price was going to break down. Either, at first I thought it was going to come down, but then we hit the 2 standard deviation from this, right? So this here is your retracement level, 2.5 retracement level. So same thing here, showing strength, failure swing lower. Then we displaced higher, right? So I tried to long, and then it failed, right? So it failed there. Well, I mean, technically this didn't fail because it didn't take out these lows, but it did stop me out because I wasn't, trying to hold it all the way down to here. And then I think it went higher one more time, but I was already done after about 10 o'clock. So back over here, yeah, so here was where I got stopped out and hit the max daily loss limit, which is evident by this right here. I hit the max daily loss on this account when I was only trading this one. And then I bought these two. And then I traded all three back up. But this one only had $2,000 left of drawdown before I lost it. We'll move on to the next one since I already went over those trades. All right, so this is the 17th. Looking at this photo, looks like I was fibbing it on the 1 minute. If you look here, we've got the 6 p.m. open here. Monday, March 16 at 6 o'clock p.m. So this is the start of Tuesday here. I took the trade over here, however. So if you look at this, we opened up, went down, took out liquidity here, and then we also created liquidity on this low here. And then there's also liquidity point here, and then buy side liquidity here, and then this created its own buy side liquidity. But if you look at the manipulation leg down here, that's what sent price higher. We hit the 2 to 2.5 retracement / reversal level, and then we quickly sold off. We created a fair value gap here on the 1 minute. So 1 minute SIBI, that's essentially where I shorted it, right? So well, I didn't wait for the pullback up. The reason why I took that trade so early is because of the order block. And then we have a rejection of the new week open or the new day opening gap for March 16, which is technically March 17. We touched the retracement / reversal area, and then we quickly sold down. We created a market structure shift. So this right here was just a pullback up to run lower. And I was essentially targeting this 4-hour BISI down here. And then you have my executions here. So shorted, added, and then bought it back here. This is where I lost the other account. If you go onto TradeSyncer, we have NQ, NQH6. I did have the MNQs on here as well. And if you look at the list of accounts that I have, you can cross it. So whenever one account is trading, NQ, you can select this, and then this account will only trade MNQ. So I guess like the way I set it up, or like which one I selected over here when I did it was wrong. So when I copy traded the one that only had $2,000 worth of drawdown, on this pullback up, that account with only 2,000 ended up failing because it went below the $2,000 drawdown limit for that day before I lost the account. And if you look at the chart, I actually was adding, right? So I added first, and then on this green candle, I added again because I was thinking it was just going to flush real quickly, and then it pulled back, and then it went to target. You can see, I was like, it is what it is, right? I messed up on setting up the TradeSyncer. I was like, whatever, I still have the other two accounts. Let me go back here so I can show you how the higher time frame candles looked first. So this is the current 1 hour candle here. Right? Oh, kind of fast. Whoops. Let me go to like 3. There you go. Yep. Then Asia opened up. Failing. Boom. Right there. And then this one was on March 17 after the open at 6 o'clock. Looks like I cleaned it up a little bit just to make it more appealing because it probably looked like shit with all the indicators on there. But yeah, so I took 3 contracts here at the low. We have the 2 p.m. first presented fair value gap. We have the 6 p.m. first presented fair value gap. And then we have NDOG up here, delineating the difference between the close the previous day and the open of the new day. And then I also have the manipulation leg here because it started going higher. So I wanted to see where price was going to retrace, reverse, all that stuff. So I went long, got stopped out at break even, went long again, got stopped out at break even. And then it looks like I tried to short it. Yeah, so I tried to short it one more time to see if it would flush down, and then I got stopped out basically at break even again. So 3 break even trades, just trying to find out where the hell this damn thing's going. My initial trade, if I had kept my stop loss the same instead of trailing it, because I think I had my stop loss either here or here, I don't remember. But if I had kept my stop loss at any of those points, I wouldn't have got stopped out, and then I would have ran to target, and I would have been in the profit. I was just like, I wonder where it's going. Right? And it smashed the 4 smashed the floor, went like way above it. I was like, whatever. Moving on. This was a day that I think I was just trying to scalp it like on the 1 minute, because this doesn't look very clear for 5. So yeah, this looks like 5 in the morning, 6 in the morning. I remember now. So this was, yeah, London. So I was taking trades at London, trying to figure out where the hell it's going. Either it's gonna break up and leave, or it's gonna fail. And then it finally happened, and I got a perfect trade down off around 25,180. This is part of the reason why I was kind of like skeptical as far as like where it was going, because that 4-hour candle just opened up. If I were to play this, so see how this new 4-hour candle opened up? This is a 4-hour power of 3, since we're looking at lower time frame price action based on a 4-hour candle. See how this candle comes down, fills in this fair value gap, this 4-hour fair value gap. This is a BISI. That is sometimes enough for the 4-hour to just start expanding higher. The whole time I was looking at, you know, this, even this here as well, because I was thinking that every touch into this was just a touch of this fair value gap here to basically invert it and then go lower. But it kept like breaking the low, not doing a follow through. It came back up, then it pulled back and then run. So I almost got chopped up in here, and then I finally caught the short. So if you look at it, right, getting chopped up, sold, bought back, sold over here, bought back, and then I sold again, and I kind of just like walked it down. If you look at that, yep. Yeah, so sold, bought it back, and then I think I sold one more time, right? Yeah, because I sold down at 25,080, which is like over here. So if we play that, yep, rode it all the way down. I think this was just a scalp to finish off the rest of my profit. And it looks like I fibbed the 5 minute. Yep, it was just I fibbed down. So same thing, just the opposite way, right? So 2, 2.5 tracement level, touched it here, retraced into this fair value gap here, 5 minute SIBI. Then we also have this change of state of delivery here as well. So this is a 5 minute change state of delivery. It's also like an order block. It would be this whole thing. So 5 minute order block, but it doesn't even touch it. This is a immediate rebalance because you got a low, high, displacement down. It touches the wick just slightly, and then it freaking sells off and goes down. We ate for the 4 standard deviation, and then we dug into the 4-hour BISI. Pretty clean setup after it got out of this consolidation. So moving forward, this was the execution I think that I took the next day. Yeah, so this was the long, basically just looking at the 1 hour power of 3. Yeah, so see, I caught that like right as it was expanding. Low, high, lower low, sweeps liquidity there. Displaces, this is a 5 minute SIBI over here, but it used it as an inversion for value gap on this side once we started switching to go long. Change state of delivery, market structure shift, breaker, whatever you want to call it, right? Actually, well, I guess, yeah, low, high, lower, low, higher, high. Yeah, so I guess this could be a breaker on the 1 minute because this is the 1 minute chart. Expands here. The reason why I entered here as opposed to like, you know, down here is because I was looking at this right here. So this would turn into a 1 minute inversion fair value gap. So you take that low to that high, extend that out. I entered long right above that. Hold on. Sorry, my son woke up. Forgot what I was going to say. Oh, yeah. So this 1 minute SIBI here, I was already anticipating that this was going to be an inversion for value gap because price already took out short-term buy side, short-term sell side liquidity. We rallied higher, and then this 1 hour candle opened up right here and then manipulated down already. So I was thinking that this was just going to do a small manipulation and then expand higher really, really quickly. So it was a combination of the 5 minute bearish order block getting reclaimed and then running higher, and then a small manipulation on the new 1 hour candle, using this 1 minute SIBI as an inversion for value gap, using all of these as order blocks. So we have a bullish order block here. We pushed up, pulled back down into it. about halfway there. None of these candlesticks closed below the halfway point. And then we went higher, and then we closed slightly above this, which made this a bearish or bullish order block. And then we had a slight pullback. And then if you look in there, there's also a small fair value gap in there. So I basically just entered right there, put my stop down here, because at most I would expect it to come back down would be to this SIBI. So stop here. This gives me room in case it does want to revisit that sell side imbalance, buy side inefficiency, and then it expands from there. But yeah, I was like, it's more than likely going to just expand off of this. This is good. It's already like showing speed out of the top of that reclaimed order block. So that's good. Pulled back onto it. No candles closed above or below the halfway point of that order block. Expanded again higher, pulled back, and then yeah, we continue. And I was essentially shooting for like this 2.5 standard deviation at least, because that's the manipulation leg down here that took out short-term sell-side liquidity before it started expanding higher. So now we know that it's more than likely going to at least come to here. But I was also like trying to get the profit target as well too. So like at 2 we were only at 1400. We're trying to shoot for 19. So that's the reason why I had it up there. And then it finally went and did it. And then at that point, I only needed one more $1,600, $1,700 day for a payout, which takes us over to the end of Thursday. Posted this on the 20th at 12 a.m. So the 20th was Friday. I took this trade after the open at 6 o'clock. Looking at this photo, it looks like I got the 1 hour SIBI correct. The end dogs aren't showing for some reason, but that's how I framed the targets to the downside. So like I was saying, this was a perfect catch of the 1 hour power of 3. 6 o'clock here, 7 o'clock here, which means this 1 hour candle just opened up. As you can see, there's a volume imbalance there on the 1 hour candles. It's when there's no candlesticks that overlap an area at all. It's just the wicks, or it's there's no wicks at all. I didn't know if price was going to go down and then up, or if it was going to go up and then down. At this point, I didn't know. I had an idea, but I was like, I don't know, it's kind of 50-50. Let me look at the chart. It looks like I tried to go long right before the 7 p.m. open at about 651, 652. So I was probably anticipating the macro again, which is 650 to 710. So right here, your value gap there comes in. So I was probably anticipating it to go higher, which is why I bought. And then I think I got scared out of it, which is why I sold it really quickly. Tried to short, and then I bought back my trade at a loss, and then I tried to scalp it up because at this point I was thinking it was just going to run higher and go for the liquidity over here, or even over here. Especially after this candle opened up, I was like, I don't know, this looks like it's more than likely going to go up. I'm not gonna lie, I did a degenerate ass move on this. I only went with one contract here long. I bought it back. It was like a small loss. And then I tried to short 2 over here, and I bought it back at a loss up here. So I think I was down like $600-700. And then I was like, it's probably going to go up and take out the liquidity that I pointed out earlier and dig into that fair value gap on the 4 hour. I went 5 contracts to just flash up. And then I saw this happen and it went down. And then this candle opened up, wicked, and then went down, so I closed that at a loss. Well, I didn't close it at a loss, I reversed it. When you reverse it, it closes the trade and then flips the direction of the trade at the same time. So it got rid of my long and then put me in a short at the same time. So I went from 5 contracts long to 5 contracts short, and then it flushed, because I was also looking at the 1 hour wick, and then it flushed down, and I was targeting the lows here, and the new day opening gap. This move up also took out short-term buy-side liquidity, and then it dug into the SIBI here. So because it did that and then quickly fell back down, I was like, this is more than likely gonna sink. So if we play this forward, the 1 hour candle opened up very shallow wick on the bottom, went up into a fair value gap, took out short-term buy-side liquidity, didn't show a willingness to go higher by displacing higher. Whenever you see ICT traders talk about displacement or a willingness to go higher, or a really obvious move that tells you that price wants to go in either direction, whether it's up or down, that is what we're looking for. At key points like this, where it takes out liquidity, whether it's buy side or sell side, if you don't get a really big move past it, and then past PD arrays as well, especially if they're on the higher time frame, like the 1 hour or the 4 hour, the daily, if you don't get moves quickly past those points of interest, it's more than likely going to fail. So that's the reason why I reversed it. And there was also this volume imbalance and then the targets to the downside, right? These blue lines of liquidity. This was also the macro. Macros are points in time where price will either run for liquidity or run for an inefficiency. What did this macro do? Started, took out buy side, and then that was it, right? Then it started sinking after the macro was done. I was like, this is more than likely going to sell off. And then it did. So that's the reason why I quickly reversed my trade to get the hell out of it. I caught that power of 3 perfectly. Couldn't have done that any better if I wanted to. That's how I traded these accounts for 9 days and got a $6,000 payout. Hopefully you guys learned something. But yeah, we're back to square one. The good thing about the second payout on these Lightning funded accounts is you only need $4,500 profit instead of $9,500. I only have to shoot for $1,125 per day. That's the plan moving forward. Hopefully we can get another payout by the end of Friday. But that is it for me. Thank you for watching this far, and I will see you all in the next video. Have a great weekend. Enjoy the rest of your day. Bye, everyone.